Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here chatting with Sean Brodrick, editor of Wealth Megatrends and contributing analyst to Weiss Ratings Daily. Now, Sean, we're going to start off with a market that is continuing to scream higher, and that is the uranium sector. Huge spike over the last, let's say, week or so. A lot also driven by Kazatomprom announcing lower estimated production numbers. It seems like almost everything is going right for uranium right now, which is great for uranium bulls. And quite frankly, it's been a standout sector as a lot of other sectors are more or less kind of moving sideways here. Sean, how sustainable is this run in uranium? And do you think it continues to scream higher to all-time highs that are much higher than current prices?
Yeah, well, I think it's quite sustainable. It all depends on your time frame, but I certainly think we are going back to the old high, which is 136, not that far away. And that high was made in 2007. And if you adjusted for inflation, that'd be over $200 a pound. And so I think we could definitely go and test that because what's happening now, as you said, we heard from a big global supplier supplying 20% of the world's uranium that they aren't going to meet their production target for this year, but they're the third one to say so. We also had that same news from Cameco and from the French miner Orano, which has operations in Niger. So they've both lowered their production targets for this year. So on the short term, you can see a supply squeeze. Also short term is that we are seeing Japan restarting 7 of its nuclear power plants. 8 more have applied for restart permits. Part of the thing that hammered uranium into the dirt back in the day was those Japanese atomic power plants selling their uranium stockpiles into the market. That isn't there anymore. In fact, a lot of the inventory that used to be sold into the market just isn't there anymore. And that's why I think this can really go for much longer. Now, there's a bunch of new uranium mines coming into production in 2024. We know that as well, but it's not nearly enough. So I expect things to zigzag higher. Probably as these new mines restart, we'll see the price pull back, and then reality will set in and stuff, and the price will go higher again. There is one producer, or I should say potential producer, that I'm looking to announce sometime within the next couple of months. That would be Uranium Energy Corp. They haven't announced yet. They can make money now. They simply have no reason not to produce, and I'm amazed they haven't already announced. So I'm long them. I expect them to say they will go into production sooner than later. It would take about 6 months after they announce to actually start uranium production from their ISR plants in, I want to say, Wyoming and Texas. So we'll see how the market reacts to that news when it comes out. But overall, it looks like a very bullish situation for uranium. And like some people might be thinking, well, if the price goes higher, then more mines will open up. Yes, but it takes years to open up a mine. And the other thing, if price goes higher, that'll make nuclear power unaffordable. Actually, no. The price of uranium is such a small part of the actual cost of nuclear generated electricity that it could easily go to 200 and it wouldn't make much of a difference at all. Just a couple pennies. So, yeah, I think things look incredibly bullish. That's the point I made last year. We held a whole bunch of positions up into late November, early December, and then I saw that things were pulling back. So we sold nearly all of our positions. And then just a couple weeks ago, I saw things start to pick up again. I mean, just bullish volume, prices moving up. No breakouts yet, but that's when I started adding positions again. And that's what we really want to do. There was a pullback. It's okay, rode that out. I'm sure many people rode it out. Other people maybe sold like I did. Now they're buying back in again. I don't think this sentiment around what's going on in uranium is really bullish enough because people remember what happened last time, which is it got to 136 and the new supply came on, and that was pretty much the end of it. It's hard to bring on as much new supply as is going to be needed, especially when half the world committed to more nuclear power as a way to get greener energy for the future. That just happened at the big energy conference they had. So, yeah, I think things look incredibly bullish. This is probably one of the two industries that I'm most bullish on for 2024.
Well, Sean, that is a great summary of what's going on in the uranium sector. And just as a heads up, you must be a prophet, Sean, because just 7 hours ago, Uranium Energy Corp, which I'm also a shareholder in, announced that they are going into production this year in August. And so they just put out that news this morning. So you were very prescient there and thinking that they should be ready to get back into production because they literally just announced it. And enCore Energy, another ISR producer in the U.S., is also going into production this year. So
good. I own that one too.
Yeah, so there you go. We got some new production coming online, but to your point, at the COP28 conference, a lot of global commitments from nations that they're going to be expanding their nuclear power, nuclear energy footprint, and there's not nearly enough supply that can come on fast enough. One question I have for you, Sean, is that when I look at a lot of the charts, there are some companies like UEC that we mentioned breaking out to new highs even today, and they were last week. And some of the other bigger companies have, but there's a lot of companies that are quality companies that actually had made their highs back in 2021 or the beginning of 2022, depending on the chart, and they're not anywhere close to their highs now, where uranium price is substantially higher than it was a couple of years ago. So do you think that even if the price of uranium was to get kind of channeling in the $90 to $100 range for a while, that a lot of these miners could still keep moving just to catch up to the move that the uranium price has made?
Well, there are a few reasons that the stocks could be underperforming right now. One thing we've seen in gold miners and silver miners, just use that as another example, is that they've underperformed the move in gold. And the reason is because those companies have created more shares, they have share dilution, their costs have gone up, so they have lower profit margins. So that's what's holding those miners back. I don't know specifically what's going on in the broad uranium industry, except I do know that it's underappreciated by Wall Street. I mean, there was a time when Wall Street was more excited about the uranium industry. It's not now. The only one they buy is Cameco. That's it, which has been one of the better performing ones. So I think that we'll have to see how it goes. But I definitely think there could be some catching up by the stocks. That's actually how I'm playing it, is I don't think Wall Street is optimistic enough. So I think there is going to be a lot more catching up. But you're right. The stocks and the funds have underperformed the metal itself. It's really kind of a shame. I'm not sure. I'd have to look closer into it and go stock by stock and see how much share issuance is going on, what's their debt situation, what's their cash situation, and what's their cost situation. These are the things that are ultimately going to determine their share price.
What about hedges too, Sean? How closely do you see what companies have hedged future production at certain prices?
I'm actually not that much into it. Are you speaking like Cameco, or who are you talking about?
Yes, some of the majors that have hedged some of their production. I've read some articles that can hold those companies back, but then you can also time it with when those hedges run out.
Right. And those hedges that I know about aren't that big. I mean, maybe that could be weighing on them. Maybe you know more than I do, and maybe you know about some big hedge book that they've got. But no, their hedges aren't that big. It shouldn't be that much of a deal. But maybe that is weighing on sentiment. But it shouldn't. Heck, let's talk about Cameco. They're one of the ones who announced that their production was going to be lower this year because of some problems they had a mine. Well, what did that do? That actually sent their price up, because since there's less uranium on the market, that actually makes their shares more attractive. So, I mean, it is hard to figure out this market sometimes. I know it's extremely frustrating for everybody, especially when you look at things like, say, precious metals. We don't really know. I mean, sometimes the way the precious metals act, it just blows my mind. It should be much better than it is. But, I don't know. I'm just kind of out of words on that whole thing. I don't even want to talk about precious metals at this point. I only have very small positions right now. I'm so ticked off at them because every time it looks like they're breaking out, they just go sideways and then start to drift lower and just drive me bananas. Uranium, I hope to avoid that same experience, but we'll see how it goes.
Yeah, Sean, we'll see how it goes. And in general, a lot of these companies, if they are hedging their future production, it's really through long-term pricing contracts that they set up with utility companies. And so a lot of those are coming in higher than expected, but maybe not as high as the uranium spot price has moved. So maybe they are a little bit behind on that front. But to most of these companies, they still have a lot more supply that they could bring online if the long-term contracts were juicy enough to incentivize that production. But anyway you slice it, the uranium sector has been a hot space to be in, and it remains a sector where, at least in the resource stocks, you're seeing some green on the screen. But you brought up gold and silver, and you brought up some of the other resources, maybe not tracking as close to their price moves. What do you make of the move in precious metals where we're still having a slow start to 2024 in the precious metals equities?
If it was any slower, it'd be going backwards. I mean, are you trying to make me cry talking about precious metals? I'd much rather talk about artificial intelligence. But sure, I mean, we can talk about precious metals. Those companies that report bad news are punished. Those companies that report good news are punished. I mean, there isn't any investor confidence in this industry. It's really hard for me to understand and to grapple with, and that's why I'm investing in like other things. I mean, like I said, we have a couple of gold and silver positions in resource investor, but after uranium, probably the thing we invest in most in that portfolio right now would be the reindustrialization of America, and after that, oil. Now, oil, that's also in some trouble. You might think it should be doing better, considering that certain groups armed with missiles from like Iran are shooting those missiles at the U.S. embassy. In Iraq, you might think that oil would do better, but it doesn't. And everyone's worried about a global pullback, even though China just rolled out a new economic stimulus plan. So, investor sentiment is really hard to get a grip on. And part of it might have to do with the election, and I guess whichever way it goes, it's going to be hugely different. And so that might make people worried about putting money to work, because you can make money one way or you can make money with the other party, but what works for one is not going to work for the other. So you have to be kind of different how you invest. Maybe that's part of it too. There could be a whole bunch of reasons that are weighing on things here, but I mean, gold should be doing better. The fact that it doesn't is an endless source of frustration for me.
Oh, for a lot of people, it's the gold stocks that really need to pick it up. Today is another example of just a tough day for the majors, especially, and a lot of gold stocks. But hey, Sean, you said you more wanted to chat about AI. Why don't we tie that in with the broad markets? Because broad averages are down today, but they're down, let's just round it off to about 0.5% down. They are continuing to trend lower. Throughout this year, though, it has been kind of a sideways consolidation move. What do you think about the overall health of U.S. markets?
I think we're going to have a very strong year. You can point to historical things, which most people don't put much credence in, and I can understand that. But historically speaking, this would be a good year if it followed the standard pattern. We did have kind of a ruined Santa Claus rally. You can look at that and say, well, you know what? The first half of the year shouldn't be so good. So maybe so, except the reason the Santa Claus rally was ruined because it came after a 9-week rally. It had to pull back at some point. It just happened to be when we normally expect a Santa Claus rally. But what I'm looking at is governments around the world throwing money at AI for all sorts of things. And so that's going to help a whole bunch of stocks. They aren't doing well today, but they have been doing very well. We've been doing quite well with all sorts of stocks. And then when you add that into defense, there are defense stocks which are really bringing AI forward because, as an example, and I can give you many examples, but an example, we've been seeing lots of videos of drones being used in Ukraine to drop on Russian tanks and like stuff like that. The Russians figured out how to jam the people who were controlling those drones. Well, an AI-equipped drone doesn't need an operator, and it can fight as long as it has things to drop on people. And so we're seeing a lot of, say, drone companies charge into AI. We're going to see AI-equipped subs that can actually dive deeper and run longer underwater without human crews, and that's going to change the game underwater. They are working on a new AI-equipped series of tanks, because if you don't have to protect the humans, those tanks can do pretty much anything, right? AI is changing the battlefield, and that's just one area we are looking at because we see explosive potential, just to use a pun there, in these stocks. But it's not just that. AI is actually going to change things fundamentally for so many businesses. And so we are trying to stay on top of that. That's not in Resource Investor, that's in Supercycle Investor, which is my other premium service. But, we did pretty well with that trend last year. Many people think it's over. I think it's just getting started. I think AI is the leading edge of a new tech supercycle, much like we had when the personal computer came in, much like we had when small phones came in that you could carry in your hand and like walk around everywhere, much like when the original telephone was created. It actually not only changed things for many companies, but it changed how actual work is done. And I think AI's, it holds that potential to really change things.
Well, Sean, just one more quick question. I was following up on the AI and the defense and the tech side of the markets. At one point in time, maybe a year ago, you were animated as a megatrend in cybersecurity. Does that fit in with the AI movement and the defense movement? Are you still looking at cybersecurity stocks?
Oh, it sure does. One of my favorite cybersecurity stocks has about 40 AI patents, because that's one thing where it can really work, because when you're trying to respond to a cyber threat, you basically move at the speed of the people who are actually responding to it. I mean, they have their own cyber tools, but it's only as fast as they can move. So the thing they're doing now is they're coming up with AI responses, AI that can identify a cyber threat, not only stop it, but track it back to like where it comes from, stuff like that. Yeah, AI is going to be very big in cyber, or I should say cyber is going to be very big in AI. I don't really know. So that's another angle we're playing on this. It'll be very, very good.
All right, Sean, we'll wrap it up here. You seem very animated about a couple sectors out there. The rest of the sectors, well, I think we can all hope that they get a little bit of a bounce here because today there's a lot of red on the screen. But hey, there are some trends that it sounds like you are continuing to play that are very much carrying through the start of this year. So, Sean, thank you for your time. Great chatting with you. We'll chat again in another couple of weeks. Hope you have a great rest of your week.
Thanks. You too, guys.